The Balkans have been receiving some outsized attention in the mining sector. Chinese Zijin Mining opened its operations in Serbia. Serbia will now be Europe's second largest copper producing country, and Rio Tinto has committed $2.4 billion to Jadar lithium-borates project, also in Serbia. Then there's Adriatic Metals, which is advancing its flagship Vares project in Bosnia and Herzegovina. Paul Cronin is managing director and CEO. Paul, welcome to Kitco.
Thanks, Michael. Good to be here.
What is Adriatic Metals, Paul?
Look, Adriatic Metals is basically a young company. We formed it in 2017 specifically to buy high-margin projects on the periphery of the EU, recognizing that supply chain issues are going to continue to emerge. We didn't expect a pandemic at that point in time that was really going to exacerbate that issue. But we bought this project in early 2017, and subsequent to that, we've acquired another project in Serbia last year. The Vares project is moving ahead very quickly. Our Serbian project is still in exploration stage. But all in all, this is an environment we enjoy operating in, and things are going well.
I believe you're planning to have an operating mine by 2023 from Vares.
That's right. So we've about a month ago, we completed our definitive feasibility study, and the results of that I think were very compelling. Over $1 billion NPV, internal rate of return of over 130% on a relatively small amount of upfront capex. We have just completed the project financing of the project. So we've raised both equity and debt. That debt is being documented at the moment, and we'll draw that down next year. So the project is now in its pre-development. So we're doing site access roads, power connections, finalising railway designs, etc. We just submitted our detailed engineering designs to the Ministry for review earlier this week, and so we're in pretty good shape to properly break ground in terms of the declines within the next sort of 4 or 5 weeks, with the intent of getting underground well and truly, including having all of the box cuts done and surface work by the end of the year. So it'll take us, in terms of the mining operations, we'll actually start mining properly in June or July. We'll be bringing about 500,000 tonnes to surface in the stockpile, and at the same time, in parallel to that, we'll be continuing to build out the plant and the haulage road. So the intent is we'll commission in Q4 next year, with commercial production in the first half of 2023.
You did mention the investing piece. You did get a fundraise with Orion, and also noticed that Sandfire, which has got its hands full with this new copper mine, they did exit from Adriatic.
They did, yeah. Sandfire have been a shareholder since we IPO'd on the ASX back in May 2018. They accumulated up to about 16% of the company. Obviously, with their Matsa acquisition, it was a change in strategic direction for them, and so we assisted them with a very orderly exit as we did the project financing capital raise a couple of weeks ago. Sandfire, for them, Adriatic was a great investment. I mean, we listed at 20 cents. We're now sort of $2.90. Orion coming in is great. Orion, obviously, a very well-established mining credit fund. They've come in for $50 million of equity, which is great, but they've also come in for $142.5 million of debt. And it's great to have them on both sides of that balance sheet, in the debt and the equity. I think that gives our shareholders a lot of confidence that they're more than just a provider of finance; they're a partner in the project. And we certainly enjoy working with the Orion guys. They're very technically capable and very, very reasonable to work with. So I'm looking forward to having them here again next week.
What's the community support like, Paul? I did mention a Rio Tinto Jadar, which is facing some resistance.
Yeah, so we've sort of looked at this very carefully, and I think it's because we do have that European focus, and Europe is a continent of small communities. You can't be within 20 kilometres of a village or a town. And as a result, you've got to focus on what those communities want. We have a core value, which we say we align to the aspirations of those communities. And we've designed with a company called Critical Resource a pathway to what I think is sort of a gold standard of ESG implementation. And that has facilitated a social license very, very quickly. We're fortunate that the town of Vares is an old mining town. People understand mining. They like it. But we still had to be very, very cautious in our approach in terms of the way we design the project, minimize any disruption, to look at legacy environmental issues and how we can resolve those. And I think the way that we've done that, and we released our ESIA for public consultation yesterday, actually, and that has been reviewed by one of our shareholders, the European Bank of Reconstruction and Development, who are very keen to see mining investments in the region, but they want to see it done in the right way. And so I think that work that we've done over the last 2 years will pay dividends for us in terms of not only being able to work within this community, within this natural environment, which is absolutely stunning, but it also will enable us to create a brand and a brand of a mining company that knows how to operate in a European context. And I think that will present a number of opportunities for us over the coming years.
I think operation as well, too, you always an advantage. I believe it's an underground mine. Is that correct, Paul?
It is indeed, yeah. So it's an 800,000 tonne a year underground mine, quite small by tier one mining standards, but it is very high grade and therefore high margin. We are operating in an environment that does have lower than average costs than most European jurisdictions, but it also has very favourable tax rates, very favourable royalty rates. In actual fact, Bosnia is a really good jurisdiction for mining, and I'm surprised it's taken so long for the world to recognise that.
You simplified the mine plan, Paul. You plan to produce silver and zinc concentrates. Now, I know there was operational considerations, but could you also talk about the market for those two metals? I look over the past year, you did note your stock performance, especially vis-a-vis what happened with Sandfire. You're up 30% for the year. Silver miners and gold miners are underwater for the same period, while, zinc has been on a tear.
Yeah, I think when you've got a commodity mix of silver, gold, lead, zinc, copper, you do get an implied hedge. For us, silver and zinc are the two biggest contributors to revenue. Those concentrates are destined for European smelters. We have very low iron concentrates, and that makes them perfectly suited to a number of European smelters that are obviously right on our doorstep. Our intention is to ship our concentrates via the railway line that exists already at Vares down to the port of Ploče in Croatia, where they can go to those smelters. We haven't locked in our offtakes yet. We still think there's an opportunity for better terms, but we are very advanced in those discussions.
How is it going with the smelters, Paul? We've heard the difficulties that they're having right now in Europe with the high energy prices.
I think the smelters probably view that as temporary because we're certainly not seeing any degradation in terms or their desire to acquire most, if not all, of our concentrates over the life of mine.
Are you seeing anything else strategically, in terms of interest? Europe being a country that wants to do more, more production of zinc, for instance?
Yeah, look, what we're seeing actually is right in our backyard. We have got 5 drill rigs turning at the moment. We are a 10-year mine life. I'd like to see that get to 20 or 30. My best chance of doing that is with the drill bit. To date, we've been having quite a bit of success there, and there'll be some further announcements this side of Christmas regarding that. But we also see a number of potential acquisition opportunities. And now we've just completed a large capital raising, and our capital is earmarked for the development of the project. We want to bring it into free cash flow as quickly as possible. Our payback on the debt can be very rapid, despite it having a 4.5-year term. But what we will have, by the end of 2024, is we could be potentially debt-free with around $300 million US in available funding. And that gives us the opportunity to look at projects that probably haven't been advanced in the European context because communities have those concerns around mining, around how things are done. But I think if you're a company that demonstrate that you do it really well, then I think that that in itself, coupled with those assets, creates a great opportunity for growth for this company.
Is there any other catalysts that people should be aware of other than possible investments? And then you also have the detailed engineering study, Paul.
Yeah, so we've obviously been working hard on exploration this year, and we're starting to see dividends from that. I think the other catalysts are really around construction. You'll see a lot of progress on the construction. We've actually installed a time-lapse camera on the roof of our building so that our shareholders or anyone can actually see how we're progressing. But I think we are at that point where institutions know this is going to happen. We put in a great team of people to construct this project. We've just engaged with Ausenco in Toronto to lead the EPC effort. And we're continuing to look at opportunities for optimization, as any good development team should do. I think we are also doing a lot more work on our metallurgy, on our metallurgy. In any polymetallic project, it's the first thing you've got to look at, even before your resource. And whilst we've got good recoveries, we think there's room for improvement. And we are now starting to just do minor tweaks here and there to reagents, reagent quantities, residence times, etc. That's starting to deliver some better outcomes. And so there's a whole pile of planning work that's going into the next round of met work, which I think will deliver a better outcome than what we presented in the DFS. And of course, if you look at the sensitivities of the DFS, the project is not really sensitive to OPEX. It's not really sensitive to CAPEX, but it is sensitive to commodity prices, and it is also sensitive to recoveries, as you'd expect.
Paul, thanks for speaking with Kitco.
You're very welcome. Thank you very much for your time.
Paul Cronin is Managing Director and CEO of Adriatic Metals. My name is Michael McRae, and you're watching Kitco Mining.